MarketChameleon.com YouTube channel. If you look at the disclaimer to the, I'm assuming it's in the middle of your screen to the left of me. I'm going to read that before we get started. Market Chameleon is not a registered investment advisor or broker dealer. Either am I, Will McBride, or Raj. None of us are broker dealers. So if you have questions pertaining to your account or trading, contact a broker dealer and ask for professional advice. This is strictly for educational purposes. So I am going to stop the share. And with that, let me know if you can hear me, let you know where you're from in the chat on Zoom. Also, we have people in the YouTube chat. Any questions? Let me know the sound is good. Let me know where you're from. A housekeeping note, we do a pre-market show, my partner and I, Dimitri, every morning where we walk through the Market Chameleon and different ideas and things we're seeing in the pre-market. So you can join us for that. And with that, the one, the only, Raj. How you doing, Raj?
Good, Will. Thank you. Thank you for having me.
Hi, it's always a pleasure. I love these monthly visits with you, buddy.
Same here. Thank you.
It's always, your backdrop is so serene. I'd like to live in your backyard. That's beautiful.
Yeah, it's nice here. So
we have a bunch of people on. Someone from Queensland, Australia, Boston, Mass. For those who don't know, I'm located in Bucks County, PA, and Raj, you are somewhere.
I am in Western Canada, Vancouver, British Columbia.
Vancouver.
Yeah, and I'm an architect. I do trading part-time, and I've been using Market Chameleon for more than a year. I have about a couple of years of options trading experience. So I'm not an expert by any means, but just like to share what I know, and I'm learning a lot from other chameleons, and especially Will and Dimitri. So thank you for having me.
And Raj has actually been super helpful to the whole chameleon community. He basically is one of the big figures on the Discord that was created by another very active chameleon, one of the first, the doctor, Jake. So Jake created a Discord channel. Raj is one of the big involved chameleon. So anyone who wants a link to that Discord run by Raj and Jake, let me know. Actually, you know what? I'm just going to put in the chat, make it easy. Go on, check out the Discord. Please follow the rules. What are the rules with the Discord again? Just basically be polite.
Well, yeah, just to be nice and friendly, no spamming and no cross marketing, or not pushing your product, or no pump and dump kind of stuff. It's just a bunch of friendly chameleons helping each other. That's simple.
Yeah, and that being said, though we all use the chameleon, we realize people use a lot of different, products to build their thesis. So you don't just have to talk about the chameleon when you're on the site. There's a lot of information being pushed around.
It's run by volunteers, so nothing is sponsored by chameleons. So we share a lot of different analysis and viewpoints there from different websites and things like that. So it's just multiple minds and multiple eyes looking at a story or a trade idea. Okay, so can we get started then, Will?
Yeah, let's go.
Okay, so let me share my screen. Okay, so today's topic is about Iron Condors. So in terms of it may be one of the most popular strategies for options traders, those who do spreads and who do risk-defined trades. So Iron Condors are very popular. I would like to say condors in general. So what is the difference? What are the different types of condors, and why would you use them? So we'll go over that. So basically analyzing a condor, how to open a position, adjusting a position, rolling and closing Iron Condors. So it's a vast topic, but I'll try to cover it in 1 hour, or actually 40 minutes. So we have time for questions. And feel free to interrupt me or post your question either in the YouTube or on Zoom, or you can even raise your hand and we can actually bring you on live to ask the question. Okay.
Yeah, and that's something that was an idea that Raj presented to me the first webinar, and Dimitri and I also use it on our morning show, and it's a great feature. So if you're on the YouTube, we have about half the viewers on the YouTube. I put the link to the Zoom on the YouTube. If you want to ask your question live of Raj, please click on over. Just let me know you want to go on live, and I will unmute you, and that will allow you to talk. You don't have to turn on your camera. Just let us know you want to come over and speak to us about an idea or something you have a question about. And if you're on the Zoom, just raise your hand or type in the chat. Let me know you want to go on live and we'll bring you in. So with that, let's go, Raj.
Okay. So just a simple agenda. And we'll look at what is the Iron Condor versus just condors. So condors like call condors and put condors, and what's the difference between them and an Iron Condor? What are the benefits and drawbacks of condors or Iron Condors? And then analyzing them, probabilities of winning, then adjusting, rolling, and closing them. So that's simply the agenda, but we'll try to stick to that. Okay, so types of condors. This is just some images I found. So a long condor, so long call condor, and similarly there's a long put condor, so which consists purely of call options. So there'll be short calls and long calls, right? So two vertical spreads. Eventually, essentially all condors are two vertical spreads combined together. So you can see that they're all two vertical spreads. So there's a short position and a long position. And in a condor, usually there are 4 positions. So each of this point is 1 position, right? This is the price. So these are profit loss diagrams, okay? So you have long call condors, long put condors, and you have iron condors. So iron condors are essentially a credit strategy. So you on one side, let me get something I can draw with. Okay, so let me try to annotate with this. So on one side, you have puts, and on the other side you have calls, right? And so you get a credit for both of these vertical spreads, and that makes it an iron condor. And you want the price to stay in here. A reverse iron condor is the opposite. So you use this strategy when you want for your analysis, if you think that the price is going to stay between a range, it's going to stay in a channel. So in this case, for example, between 40 and 50, then you use this strategy. If you think that the price is going to break out of a channel, currently it's in a channel, but it's going to break out, right? Then you use the reverse iron condor, or also called as a debit condor. This is also called as a credit iron condor, and this is called as a debit iron condor, because in this case, you're paying to get into this trade. In this case, you're receiving a credit. In this case, this is a debit trade. And similarly, again, you have two vertical spreads here, okay? So let me clear that. And let's go to the next slide. So let's focus on iron condors, okay? So this is a little bit more colorful diagram, and this explains a profit loss diagram. So you see that in a profit loss diagram for options, usually the price axis is flipped. So it's basically turned down. Usually on a chart or a price chart, you have the price on the x-axis, on the y-axis. In this case, the price becomes on the x-axis, right? So the price of the underlying, and this is profit and loss. So this middle line is the break-even line. So this is where you want the when the price stays in this range, in this particular range. You see the green area is where you make the profit, the red area is where you make a loss, okay? Then you have the break-even points. So you have the two vertical spreads. So in the middle of the spread, you have the break-even point. So if the price goes outside, so above, so this side is higher price, right? And this side is lower. So if the price goes higher, you're going to make a loss. And if the price goes lower, you're going to make a loss. So you want the price in case of a credit iron condor to stay in this range between the two break-even points. So you have two break-even points. The max profit you get is there is a limit. So you have a flat top like a hat, and a max loss you make is also limited. So it's a risk-defined strategy. Okay, we will actually do and set up an iron condor. I'm just going through the slides right now, and then we'll actually do it over Market Chameleon and even on Thinkorswim. Okay, so now
actually, Raj, that was one of the first questions. Will you show how you screen or use the Chameleon to look at an iron condor? So
exactly,
you're going to go to that. All right, perfect.
Yeah, I'll do that. Just to get through basics at first, and then we'll actually go into live demo. So this is the price chart. Now you have the price on the y-axis. and time on the x-axis, right? And this is what you want to happen. So these are your two verticals, right? On the high side and the low side. So you have the put side and the call side. And you want the price to stay within this channel for you to make money, right? The moment if the price breaks out of this, either to the higher side or the lower side, you're going to make a loss. So this is basically your price lines placed on top of a bar chart. Okay, so with that, let's get into a demo. And in the meantime, what I'm going to do is I'm going to fire up my Thinkorswim, so I can actually show it on both Thinkorswim and Market Chameleon. Okay. So while it's loading up, so let me now let's look at some options. Let's look at some active options. So today, let's say Microsoft was very active, right? You can see that Microsoft had more than 1 million option trades. So 1.16 contracts just traded today. So let's look at this. I'm going to control click on Microsoft. So it opens in a new tab. So now you're going to drill down into Microsoft and try to find Iron Condors. Okay. So simply, if you want to find Iron Condors on Market Chameleon, if you go to on the summary, if you go to the trade ideas, you can see that the best trade ideas are selected here. You can see the top 3 by edge, top 3 by win rate. And if you want to credit Iron Condor, you click on that. And if there are any opportunities that are found, they will pop up here. If you let's see debit Iron Condors. So it did find a debit Iron Condor. Okay. So let's look at that and we'll convert it into actually a credit Condor. So once you find a trade card, you can either use this way or you can directly build it. With the trade card, it's pretty handy. You get at a glimpse all the important information, historical with backtesting. What is your win rate? What is your edge as is calculated by Market Chameleon? This is the debit Iron Condor, as you can see. What is the debit you have to pay and what is the theoretical value, right? And it tells you here what are the strikes and the expirations. So if you click on this option chain, right, I am going to click on this and it opens in a new tab. So now it's going to take us directly to the option chain page of Market Chameleon for Microsoft with all those 4 legs populated for us, right? So these legs which are showed here, they're already populated. And now we can analyze this further. So if you say load strategy, then Market Chameleon is going to build a profit loss diagram for us, similar to what I showed you, right? So this is the debit Iron Condor, and you want the price to move out of the channel. So you have the price axis, horizontal axis, x-axis, and the profit loss axis, which is the y-axis. So let's say we'll kind of squeeze this or stretch this diagram a little bit. So we see more of it. So we say, give me stock range of 10%. So now you can see that this is the current spot price, right? And this is 1 standard deviation. And if it's, so currently this one was picked because the probability of it making more than 1 standard move, like Market Chameleon decide that it can make more than a 1 standard deviation. So let's say if it makes a 2 standard deviation move in either direction, then you can be profitable, right? So you can see if the price goes above here, you'll make profit. So here is the break-even point on the high side at 350, on the low side at 325 approximately, and today's price is 340. So you want the price to stay in this range between 325, or sorry, you want the price to move out of this range. Okay, so this is a debit Iron Condor. And let's say Market Chameleon has found this, but you think that the other way is more likely to happen, that Microsoft is going to stay within the channel and you want to convert this into a credit Iron Condor, let's say with the same strike prices or different strike prices. So you have your short positions here, which is 315 put, right? This one, this is 315 is here, and then you have your long which is 330, and you have your short call 360 here, and your long call is 345. So to reverse this, all you simply have to do is change this. Say, instead of sell, you say this is buy. Instead of buy, you just flip all of these sides, sell and buy, right? And now we will load our analysis again. And now you can see that now this has become a credit Iron Condor, and you are getting a credit for this, right? So this is the midpoint that you can get. This is for an immediate fill. You can, if you just place, if you're happy with 4.57 credit, that's $457. You can just put it at the bid, and the asking is 4.9. So the spread is about 40 cents. And if you want a better fill, you want to fill this for either 4.74 or better than 4.4, all the way up to 4.9. You can even try with 4.91, and then keep tweaking it until you get a fill. So if you want this position to be filled, okay. So now let's look at the payout diagram for this, okay. So this is the chart display settings. So we'll see that this has got this is the 10th of December, right? So 10th of December, 17 trading days to go, right? So let's say if you think that we are going to stay in this for about a week, starting from today, so we go into let's say 26th November, right? So this is the likely payout diagram. You can see the blue line is where you start making a profit. Because what's happening on this, the other thing to pay attention to is the Greeks, right? So an Iron Condor and credit Iron Condor is a delta neutral strategy, right? So you want the price to, or basically you're positioned such that whether the price goes up or if it stays in a channel, your delta is very low, but you have theta. So $9.2 is what you're gaining every day for the time that the price stays between this break-even point. This is what you're gaining. So this is your theta, right? Your time value. So as long as the price stays here, so you can decide to keep this position open right until the expiration, or let's say you're happy with your max profit on this is $336, right? Sorry, not 336. Payout 457. 457 is your max profit, and your max loss is 1,043. So this is basically like a 2:1 risk reward. So you're risking 2 to gain 1, right? So approximately this is the 2:1. But because it covers a 1 standard deviation move, you have 70% or 68.9% probability that it's going to expire in the middle if Microsoft does what it's usually doing, right? Okay. Any questions so far, Will? I hope
you're good, Raj. We did have a quick question from Wayne, and Wayne was just asking how many people use credit condors versus credit Iron Condors. Excuse me, debit credit condors versus credit Iron Condors. I just know we get a lot. I don't know if that's a question about Iron Condors in general. How many people? I think it's a popular strategy. I know we get a lot of questions about them through our support email. So, it's one of those strategies that people use, and if they're lining up and fitting their risk profile.
Personally, if I look at all my option strategies, I would say about 50 to 60% of all my positions are condors of some kind. Most of them, out of those, mostly I do credit Iron Condors because you want to gain from theta decay. Most of the time, if you do your calculations and analysis right, you are just going to gain by you're going to get a credit, and you gain from the time decay, right? So from theta, that's what you want. So you want to play options which are less volatile and which are giving you good premium, and you think which are going to stay in a certain channel. there's a lot of, if you are good at technical analysis, that helps a lot with all kinds of options positions, but especially with Iron Condors, because you can do your technical analysis and you think that it's going to stay in a certain range, you can use Iron Condor. And it doesn't have to be necessarily, a neutral position like this one. You can do a bullish Iron Condor or even bearish Iron Condor. So let's say in this case, if I think that Microsoft today is at 339, so let's say 340, and I think it's going to go up. I want a bullish Iron Condor. With Market Chameleon, it's pretty easy to do that. So I can just move up the strikes, right? So here, so I have on the call side 345 and 360, 345 and 360. On the put side, I have 315 and 330, right? So if I move the strikes, so you can see that now Market Chameleon is pushing the strikes forward. So I moved them by about $5, and let's say I moved them by 5 more. So I moved them by $10, and I'm going to load this strategy again. So now you'll see that my current spot price is here, and this is now a bullish strategy, because if I think the price is going to go up to a certain limit, I'm covered until a break even of 360, right? So until 360, I'm good. So similarly, if I want to do a bearish one, let's say I think the price is going to go down, I can push it down a little bit, load the strategy. And now you can see that my current spot is here, and I am my cone of profit, or the hat of profit, is on the bearish side. So it's pretty easy to do. So the thing with Iron Condors is it's very good if you do, price ranges or channels in technical analysis, and you think the price is going to stay in a certain channel within a certain time frame. Then you can do this with different expressions, right? Okay. So we got a ready-made one from here, but let's say we want to tweak it. If you want to build something from scratch, so I cancel that out, and we go into the options chain, and now here just try to build one just based on probabilities and the deltas, right? So we have so this is our at the money options, and let's go and look at the delta here. So let's say we do so deltas. Okay, so let's do 25 delta, right? So or 15 delta, right? So here this is 15 and this is 15. So this is basically roughly. I mean, Dimitri said you should not use this as a probability, but many people will use the deltas as a probability. So this one has a 15% chance of expiring in the money, and this one has a 15% chance of expiring in the money. So basically 15 on 15 on this side, or low side and high side, so that's 30%. So 70% chance is going to expire in between these two strikes, right, at expiration. So we are looking, let's look at 10th December now. So that's the one we were looking at. So we are going 10th December, or actually let's go into January. This has got an expiry. So let's look at 21st January, which has got 45 trading days, or let's look at this one. I want to go around 30 days. So with an Iron Condor, okay, so let's pick this one, 23rd January, just before Christmas, 26 trading days, okay? And we're going to pick the 15 delta. So in here we have this one, and here we have this strike, okay, 360 and 315. So I'm going to make a credit Iron Condor with the $5 depth, okay, or $5 spread. So I'm going to sell this one, the 315, and I'm going, so you can see that it added that leg 315, and I'm going to buy the 310, okay, on the put side. So that's my lower side. And if I load analysis, you will see that now I got a vertical spread on one side, which is on my put side, right? And then I'm going to do the same thing on the other side. So I'm going to sell the 360, right? That is a 15% probability, and I'm going to buy the 365. So you can see $5 wide again, the load strategy. So you can see now I have a pretty wide iron condor, which covers more than one standard deviation move. So if the stock doesn't make that, but as I go wider and wider, my risk reward changes. So you can see that here, $80 is what I stand to make, and I'm going to lose $420. So it's about a very big, I think that's 5 to 1. So risking $5 to make 1, but with a very high probability of success, right? Because you're covering more than a one standard deviation move. Let's say you are feeling a little bit more, you want to take more risk, and you think that the stock is actually going to stay less than one standard deviation move, and it's not going to move that much until this expiration. So you can go in a little tighter, right? So let's cancel this one, and you want to do let's say 30 delta. Okay, so you go on the put side, you sell the 330 and you buy the 325 strike, and on the call side we'll do 30 again. So you sell the 350 and buy the 355. Okay, so now I just put together a different iron condor. Let's load this strategy, and you'll see that this one has a different risk reward ratio. So you make $213 and you stand to lose $287. So this is almost a 1-to-1 risk reward, but you're in a tighter range. Your break even is 327, and here it is 352. So the price has to stay between these two ranges for that to happen. Okay. So so this way, iron condors are very flexible. Not only can you do this, not only can you shift them into more like a bullish, let's say this one with a more bullish position, or I'm going to shift it a little bit lower with a bearish position, or actually more lower. Excuse me. So this is your spot price, and this is your cone of profit. So on the bearish side, you can also make uneven iron condor. So this is an even iron condor. That means you have a 5 wide spread on the call side and 5 wide on the put side. But let's say the premiums are better on the, let's say, what are the IVs? I'm going to look at the IVs. Sorry, IV change.
Raj, we did get a question about the deltas. Do you look at the deltas?
Do I look at the deltas?
Yeah. Michael was asking, what are the deltas of the short strikes you were looking at? I don't know, but I guess
the short strike, you're in this one where I made a tighter iron condor or a more narrower one. There I looked at the 30 delta. So here you see that I picked the 30 and I picked the 30. So I go into the delta column, check the 30 ones, and then pick that strike price, right? So deltas are, of course, very important when you're looking at options. That roughly it is equivalent to the probability of that option expiring in the money, right? That's what the market is pricing them at. Okay. So having said that, I'm going to show you uneven iron condors, right? So this is the put side, this is the call side, and let's say I want on the call side. In this case, I think I'm holding a bearish view of Microsoft, so I want more premium on the call side, right? So on the call side, I have a $5 spread. So instead of $5, let's say I want to make it $10, right? $355. So let's go to 355. Okay, so load strategy. And now you'll see that this is an uneven iron condor, and you have a $10 wide spread on the call and a $5 on the put side. So you can do all of these kind of things, and you will get a better premium. So you see here now I'm getting 3.79. So my risk reward, this is 349, and on the downside I'm basically my cutoff is 151. So I have for a bearish position, I have a 1 to 2 risk reward, right? So I'm losing 1 to gain 2. But on the call side, let's say Microsoft goes makes a bullish move of even 1 standard deviation, I stand to lose a lot more on the call side. So this depends on your what outlook for Microsoft, whether it's going to go up or down, and that for that, you have to read the charts or whatever other analysis you use. So you can use this strategy to do that. So this is an uneven iron condor. So let me use some drawing tools if I need to draw on this. Okay. Okay. So so like we said, it is basically two vertical spreads, right? So on one side, and you have the call side. So this is a credit iron condor, and you do the same reverse for a debit iron condor or a reverse iron condor. Okay. So let's do that. Now, what I'm going to do is we looked at the payout. Let's look at the payout diagram. So we said 1 week down the road, so next week, with the theta decay, this is what your profit loss diagram is going to look like. So as you progress towards expiration, right? So you will see the blue line starts coming closer to the profit loss diagram. So that is your all of these different options or the Greeks, the gamma and the delta and all of those coming into effect, right? So as you start moving towards expiration, so let's say you go closer to expiration, which is 23rd December. So let's say 17th of December, you will see that this line is now much more closer to this. And you want Microsoft to be within this range. So as long as you're in this range, you've already made a profit of, let's say if Microsoft stays at this price around 340, you already made a profit of $227, right, on 17th of December. So, and if at expiration, so let's say 1 day before expiration, this will be closest to max profit, right? And on the last day, of course, it will exactly match this profit loss diagram. So as you start going closer to your expiration, this is now just a few days in. So with you're gaining with the theta $3.7 every day, right? Or actually $37 every day. So this is what you want to happen. Okay, so let's look at my slides again. So we have benefits and drawbacks. So the drawbacks, we talked about it a little bit. So what is the benefit is that with the credit iron condor is that if the price doesn't make a big move and it stays range bound, then you're gaining money just, you know, by time decay, right? As time passes closer to expiration, all of these option positions are going to expire worthless, and you, whatever credit you got, you pocket all that money. So if Microsoft expires or on expiration, which is 23rd of December, if Microsoft stays between your short strikes, which is 325 and 345, right? You make the maximum profit. If it starts going beyond that, you still make a profit until your break-even point at 350, and then you start making a loss, right? You want the price to stay in this range. So you're making money every day just by theta decay. So that's one of the benefits, and then you can play it into with different positions like uneven ones, or bias towards the bullish side or towards the bearish side. Okay. Now, what is the criteria for choosing iron condors? So I want the price to stay the same, and I also want the IV, right? So IV rank, when the IV 30 is high, which is the 30 days constant expiration in implied volatility, you're getting a higher premium. So right now, Microsoft is subdued, so it may not be the best time. So let's try to screen for something that has a very high IV. So you're getting good premium. And as the IV crush starts happening and the price stays the same, then you make a profit, okay? So the way to screen for that is, let me go to another tab. And I'm going to screen, I'm just going to do implied volatility rankings here, right? So this is going to screen the market, and I want the market cap of, let's say, over 20 billion. Okay, and we will sort this column by IV rank. So we want high, basically it want the IV 30 to be on the high side in the last 253 days or whatever. Okay, so you can see that NVIDIA has got 93 percentile ranking, and it's got lots of liquidity, lots of trading. So let's look at that, and we think that NVIDIA is going to be range bound, or let's look at some strategies for NVIDIA. So let's see what comes up. So I'm going to go in here, click on NVIDIA. So I control clicked on NVIDIA here, so it opens in a separate tab.
Hey, Raj,
Yeah.
I got a question.
Yeah.
When you're clicking your mouse on
Yeah.
the symbol, how do you get that circle to pop up around it? That's really nice for drawing your eyes to it.
Yeah, so that's just a setting in your this thing where you press the control key and it does that. I mean, you go to your I can show it to you in your pointers, mouse pointer settings. That's very good for presentations. Pointer, I think change mouse pointer somewhere here. Display of speed, I guess this is the one. And you go to pointer options, show location of pointer when I press the control key. You just have to check this one.
Oh, that's great.
Yeah, so.
Thank you, sir. You're always great with the technology.
Yep. Okay, so we are in NVIDIA and we see that its IV rank is elevated. It's 93%. So we are fetching a good premium. Since we want to collect premium with a credit Iron Condor, these are the type of candidates that we want to pick, right? So we can, I showed you how to build an Iron Condor. So you can do it this way. Another way is Market Chameleon has lots of screeners built in. So you can look at, Condor screener. So you have Iron Condors, which is, you want this one, the short inner and long outer, which is a credit Iron Condor. This one is a debit Iron Condor. So this is the credit one. And now Market Chameleon is going to screen for many different parameters as you select them, right? So let's say I want expiration to be next 30 days, right? Bid-ask spread, I don't really care about that at this point. I'm going to say earnings date. I say I don't want any earnings event in the middle because earnings can cause a lot of volatility. So no earnings event, no dividends coming up, no company events coming up, right? I want theoretical edge to be any positive, theoretical win rate to be, let's say, about 70%. And so it's going to find a bunch of different strategies here. And I can keep narrowing this filter, right? So let's say underlying stock ideas, I can say it has to be in SPY. It's one of the SPY stocks. Nothing showed up. So that's filtering out too much. And option volume, let's say I want more than 5,000 option contracts to be traded every day. So good liquidity. So stock price above 5. So I don't want any penny stocks. So I pick that, and I can also pick at this, look at this tab and set more filters. But let's just pick these ones, okay? So now here it's showing me for, let's say, for GLD or UNG, it's showing me multiple ones that it's found. If I want to see the best for each ticker, I want to filter around my tickers. I can say that show me the best per ticker symbol, either by theoretical edge, theoretical win rate. So let's pick this one, theoretical win rate. So now it's going to pick the best win rate by symbol, or let's say best theoretical edge by symbol, right? So this is one way. And then you can, it tells you the credit Iron Condor details, which strikes to sell and which ones to buy. Market Chameleon has calculated what is the win rate for us, theoretical win rate, if you keep doing this over and over. So this is the chances of winning are this one. What is the theoretical edge? So this one looks pretty good, UNG. Let's look at what is UNG. So we'll pop up this quick cheat sheet about UNG. So is for the changes. What is UNG? Oh, United States Natural Gas. Okay, let's look at the options. So a lot of open interest and expiration. I mean, a lot of open interest and transactions, and there's no news. And here itself, you can even open the option chain and look at that. You can look at the charts. So this is today's chart. You can look at the historical charts, how it has been moving, and roughly you can see whether there's a channel or whatever it's trading in. You can look at the options volume here. All that kind of stuff you can look just on this pop-up without actually switching out pages. So let's say you identified this one, right? You have the strike prices. You can actually manually pick this one, but Market Chameleon has already populated or built a shortcut for you to analyze that. So this is here. Before we even select that, let's see if we have everything else that we want. So bid-ask spread, max gain. Okay, so we have this. Let's say max gain is this much. So this is basically a 1-to-1 risk ratio. See, you gain 97 cents and you stand to lose 1.03, right? So this is and so basically it's almost a 1-to-1 ratio. 100% gain or 100% loss. Okay. So everything else looks okay. So you want to do this. So we click on this one, and now this is going to open in a new tab.
Hey Raj.
Yeah.
Michael was just. Can you just show him again how you got to this screen?
Okay. So this one is let me start all over again. Okay. So in anywhere when you're in, let's say I'm at the home screen here, right? So you have this or here, you enter the site and you have the menu on the top, right? So on the menu, you want to be in the options because we are looking at options. And for premium users, you want to be in the screener, the screener. So you're screening for options positions, right? So here you have different screeners for vertical spreads, single leg strategies, butterfly screeners, and condor screeners. So this is the Iron Condor screeners. You click on that. So you get to this page where you set up your filters. It has found a lot of Iron Condors, right? So 4,900, basically all possibilities are there. But you want to be more specific. So you want an expiration here. So in this first filter tab, you can pick all of these parameters, right? So you want 30 days, you want the bid-ask spread. This is a good measurement of liquidity. So the lesser the spread is, the more liquidity. So you can see immediately, the big active stock tickers popped up because we picked this one, and then you pick up different things like that. For ease of use, I picked this manually, but there are also presets that you can use, right? And you can also save your own presets. For here, example, I've saved this one, right? Here, but Market Chameleon has also populated or saved some presets. So let's just see one of the Market Chameleon ones. If you click on this one, this populates all the filters with that one. So best by theoretical edge plus this one, right? So best edge by symbol. Now it has found all of these symbols for us.
So that's best by theoretical edge, and then it looked like a win rate greater than 70%.
Yeah,
correct?
So win rate more than 70 and theoretical edge is any positive. So you can also pick the theoretical edge. So the theoretical edge is here. So you can see, you can also pick, so show me the ones about 10%, right? So it will filter out all the under the 10%. So now you can see that you have about 10%. Okay. So now let's look at some of them, and we will sort this table by best win rate. Now, among all of this, we want the best win rate, and then we'll see if that stock suits us. This is SBLK. I don't know what this one is.
I think that's Starbucks, right?
Oh, Starbucks. Okay. No, SBUX is Starbucks. This is
my bad.
Yeah, Star Bulk Carriers.
Yeah.
Okay, so let's say Amazon looks good. You can also look at sort by market cap. So you see here that all kinds of stuff is showing up. You can also do this in the filters, underlying stock idea. So you say you don't want with the market cap option, market cap. So you want anything about 20 billion, right? So now you will see everything is about 20 billion, and then you sort this by your win rate or whatever other parameter you want. So let's go down here. So this one has got a 22% theoretical edge and a 74% win rate, and it's Amazon and a large market cap. So everything looks good. You see the strike prices here. Let's look at the max gain and loss. So you stand to gain 38 and you stand to lose. So this is a 2:1 risk reward. So you risk 2 to gain 1. So let's look at this one. And you see the symbol show up here, C, so there's the company event. So you want to even be cognizant of this fact that you're actually at this particular expiration, there's a company event, and that can affect the stock price or the stock movement volatility, right? So Amazon is the one I wanted. So I click on this one, and it will now take me to the options chain for Amazon with all those 4 strikes pre-populated. So it saves me a bunch of time. I can load the analysis here. And you can see that now this is my profit loss diagram. You can see it's a 2:1 risk reward. So 3855, so let's say $4,000, and you stand to lose $6,200 or 6115, so 6 whatever, roughly 2:1. So this is the credit you're getting. Okay. So this is how you screen for them. Okay. So there are different tools tools of going. You can build something from scratch, like I built with using the deltas. I can use a screener to find me credit Iron Condors and then tweak them further. So once I have this populated, I can tweak this further. Let's say this one is already bullish. You can see the spot price here. Let's say I'm more bullish than this, right? So I'm going to move this strike prices more. So I can tweak this. And now I have my bone of profit should shift higher, right? So now I have more room for it to move up before I start making a loss. Okay. Okay. So now let's look at adjustment strategies. How are we doing on time? Oh, wow. 3:46. Okay. So we have about 10 minutes. I'm going to just tell you roughly. So how do you open this position? Basically, an Iron Condor, you're buying 4 legs, right? So it requires a lot more commissions, because rather than a vertical spread, you're buying 2 positions. So here you're buying 4. So when you're opening 4 positions and closing 4 positions. Ideally, you want all the 4 positions to be opened at the same time and closed at the same time. So you can make it like a combo offer, depending on your broker. They're either called combo trades or complex multi-leg trades, depending on your broker. So these are all 4 opened at the same time and closed at the 4 time. And these are very good for risk-defined accounts. Like if you're in an IRA account, which do not allow you to do naked positions, these will be allowed, because your loss is you have a max loss and max profit, so it's risk defined. You don't have infinite loss or profit in this one, right? So it's also good for small accounts where you can play with as little as $100, and you can do Iron Condors, right? Depending on the number of contracts you do. Okay, so let's look at how do you adjust them or roll them. So okay, actually, I don't have time to go into TOS. We'll just stick to Market Chameleon for this. So let's say the stock price, where's my drawing tool? So here, so right now, let's delete this. So my price right now is here. And let's say before expiration, so how many days do I have? I think I picked 30 days, right, in my screener. So I should have, 12 trading days to go. So let's say towards expiration, closer to expiration, let's say I'm here, and the stock moves. So let's say Amazon's price moves from this range to here, somewhere here, and it is now pushing against this break-even point, or even here if it moves here, right? So what you want to do is you can roll this side further, right? So what does that mean? So you can roll this edge closer, which is the put side, and collect more money. And you're now, when you roll this forward, your profit loss diagram will look like this. So you're making it taller because you're collecting more profit. So your profit side increases. So what does it mean by rolling? So you take these two, which is your put side, and you roll them closer, because now you have much more cushion on the low side. So rather than this one 3480, you can make it 3500, right? So or 3525, and this one, and you will collect. So you close these 2 positions and you open 2 new positions. So for a net credit, right? So you get more money. So you collected this credit in the beginning, but now as price goes towards your upper edge, you roll this side position forward, and your profit loss diagram at that point will look something like this, right? And let's say then it starts moving back. The price moves towards this edge. Then you can roll this side into, and you can make it something like this. So you can do that, but you have to actively, this is called active management. And the other way you can roll, if you're rolling it for the same expiration, you can also roll it forward in time. So now this is 3rd December, and the price still stays in this range, and you think it's going to still be in that particular range. You can roll this into another expiration. So you can sell or close this particular position and open a position further out for more credit. And so then you keep on going on your Iron Condor and moving it along with the price. But that is what do you say? You have to also look at the volatility, implied volatility. You don't want to be doing that when the implied volatility is very low, because you're not going to get a big premium and you're taking on more risk. So the more, as you're rolling it forward, of course, you're carrying the risk forward, right? So ideally, for an Iron Condor, my strategy is, what I do is, my profit target is 50% to 100%. So let's say this one is expiration 3rd of December, right? And let's look at 1st of December. Sorry about that. Okay, so here you can see, let's say my price moves here, and you can see that on 1st of December, if the price stays here, I am at almost 80% profit. But let's say the price is around here at that day. So this is about 50% profit. So I can just close this and take my profit and walk away, or I can roll it forward. So typically what I do is when you open this position and close this position is very critical. You don't want to be waiting for the max profit. Though this is the max profit, there is a big risk in that if the stock moves out, right? So if you have collected your theta decay, and you can set your profit to be 50%. So this is half. I set my good till cancel order to close this position either at 50% or at 75%. So this is max profit, right? So either 50% or 75% of the max profit, I want to close it. So that has a very high probability of making money on this rather than losing money, because if the price moves out of this range, then you stand to lose money here, right? So that way, and when I open a position, I immediately put in a closing position with my target profit. So then it's almost an autopilot. I don't have to sit in front of the computer. As soon as this hits my profit target, it closes the position for me. Okay, Will. So unfortunately, I was going to show this in, hold on. I was going to show this in Think or Swim, but there's not enough time to go into that. So analyzing probabilities.
There's no worry. And again, Raj is on. Any questions, you can go join the Discord. Raj is very open to a DM, and you could possibly show something on there as well. Correct, Raj?
Yeah, for sure. Yeah. And we usually on the Discord, let me bring that up. So on Discord.
Before you go to the Discord, we did have a question from Peter. He said, my impression has been to enter Iron Condors on stocks with high IV rank, but there is no IV rank filter on MC's IC Market Chameleon. Is that something you have found, that stocks with high IV may have? I mean, obviously, you think high IV, you think there's more premium to the position.
Yeah. The reason I when I was a beginner with Market Chameleon, that was a question I used to have to, why can't I just filter Iron Condors by high IV? I asked Dimitri about this, and now I understand why. is because there is a lot of different parameters being screened. When you screen for Iron Condors, when you're doing all of these things with the theoretical edge and the win rate and everything, it is taking into consideration the IVs already. So nothing with a low IV, because you're doing a credit Iron Condor, if Market Chameleon has analyzed this, nothing with the low IV is even going to show up here, right? And it is not just about IV, because IV is one parameter of how the market is pricing the options volatility, but not necessarily risk-free. If you're going with an high IV, the probability, the market is actually saying that the probability of this making a big move is very high. So going for a very high IV can also be risky with Iron Condors, right? Because the stock is likely to make a big move.
Well, that's what the IV is telling you, right?
Yeah, exactly. So, so that way, there's a lot of different in the background. A lot of things are being screened here. So I kind of when I want to look for Iron Condors, I use this, and I know that IV is taken into account when we're screening for these.
All right, perfect.
Yeah. So what I'm
on
going
the
to show
Discord,
was,
just let people know how it works, and I'll put the link both into the Zoom chat and the YouTube chat, so people can
so
join.
we have, this is our Discord server here. We have a bunch of different channels. We have, these are the more active ones, the live action ones here, and you can see that a bunch of different ideas are posted. So even if you just search for, I'm just going to search from myself, right? So from Raj here, and I'm going to look for IC. So usually I just call them ICs. So here, see Airbnb IC, this was back on this date, and I post a link directly to Market Chameleon, so you can analyze this. So let's just look for the last ones I posted here. So these are all my posts here, and you can see some of these are just vertical spreads. So this is a credit call spread. So if you click on this, this will directly take you to that option chain, right? And you can look at the strike prices and load the strategy and analyze it yourself. Oh, container not defined. I think this is already expired. This is past. This is for past expiration. The link is not.
But this is how people can share an idea, discuss it, put a link to the idea, and it helps the community, right? People are able to.
Yeah, definitely.
Put their thesis in a place where other people will pick it apart, and maybe help in building the idea.
Exactly. So yeah, we can share screenshots, we can share links, and a bunch of people or other people can look into your idea and tell you more perspectives or their analysis of it, right? So it's more eyes and more minds on it. So that's the Discord server. So Will can send you or invite you to the Discord.
Actually, it's been a while since you've done a webinar on the Discord. Maybe we can do that in the future again as well. That was super helpful previously.
Sure, yeah.
Raj, the hour is up. Another magical hour with Raj. Raj, thanks so much.
Welcome. And by the way, I just want to let everybody know, since you're inviting them, Discord, there are other active Discord users, but I'm going to be away for the next about 12 days, starting tomorrow. So I'm not going to be very active anywhere. So don't worry about that. There are other people who are on the Discord.
Are you going on another expedition?
No, not another expedition. I'm going for a meditation camp.
Oh, awesome.
And,
awesome. Yeah. For those who don't know, Raj is big into yoga. He's the top producing yoga chameleon. That's for sure. Raj, it's always a pleasure. You have a great trip. Come back refreshed, and have a wonderful Thanksgiving, everybody.
Happy Thanksgiving for all the US. We already had our Thanksgiving in Canada, but for all the US folks, happy Thanksgiving.
And what is it actually? Thanksgiving in Canada is referred to as?
It's still called Thanksgiving. And
there you
go. Happens just after, I think before Halloween, or it happens in October for us.
And what are Canadians eating for Thanksgiving? Is
Oh,
it
it's the
turkey
same-
as well, or do you have like something magic?
Yeah, it's exactly the same thing. Family get together and they have turkey feast and all that kind of stuff.
You really begin to wonder if is this turkey farmers who've manufactured this holiday? Was it really? It's good stuff, Raj. Thanks so much. You always bring a smile to my face. Thank you, everyone, for joining tonight. Check us out tomorrow morning, 9 a.m. Dimitri will have something wonderful to talk about, I am sure.
Yeah, he always does.
Everyone have a great night. Raj, thanks for the time. The Chameleons were super thankful.
Yeah, thank you, everybody. Thank you, Will. Thank you for having me. Okay, bye.
Have a great night tomorrow.